So 2021 was my first real year investing into crypto, and I had some pretty epic gains as well as some pretty terrible losses. And going into the US tax season, I wanted to make sure that I was in a position to pay my fair share of what I owe in my crypto taxes, and hopefully not a penny more. So in this video, I'm going to share with you everything that I learned in preparing to file my crypto taxes in the United States for the first time. And the good news is, it really isn't that complicated once you understand some of the basics of filing your taxes. I do need to make sure that you know this is not financial advice. I am certainly not a tax advisor. Now, I would like to give a shout out to Koinly for sponsoring this video. If you didn't know, Koinly is the easiest way to go ahead and track and manage your crypto tax liability. Through their online tool, you're able to connect your different exchange accounts, your wallets, and aggregate and collect all of your different transactions in one single place. And not only that, it also allows you to go ahead and generate the necessary reports that you need to file to the IRS to make sure you're staying compliant and providing accurate data behind your tax filings. Now, the first thing we need to understand is capital gains taxes. Now, there's two types. There's short-term capital gains as well as long-term capital gains. We're going to break down both for you so you understand which is which. Now, capital gains taxes trigger anytime you sell, spend, or even swap one cryptocurrency for another. And then based on your income bracket, so how much money you make in a year, the rate that you're taxed at is different. So let's look at an example. Let's say you bought 1,000 Dogecoin on January 14th for 0.009. And then you time the top. On May 6th, you sold all 1,000 at 0.68 cents each. You bought 1,000 Doge 114.009 for a total cost of $9. You went ahead and you sold that 1,000 Doge on May 6th at 68 cents for a total of $680. So subtracting your buy from your sell, now you're left with a $671 profit. And that is what your capital gains are on this single crypto, the single transaction. Now, if we look at the short-term capital gains tax rate chart, if you're single making under $10,000 a year, your tax rate on that would be 10%. So 10% of 671 equals $67 owed in taxes. Now let's look at a long-term capital gains example. Let's say you bought that 1,000 Doge, but all the way back in December 2019. And then again, you went ahead and you sold it at the peak in May 6, 2021. You bought 1,000 Doge on December 14th, 2019 at 2 cents for a total cost of $2. Then you went ahead and you sold that 1,000 Doge on May 6, 2021 at 68 cents each. So that nets you a total of $678 profit. Now, that $678 profit is what your capital gains liability is on that transaction. The difference though is we look at the long-term capital gains rates, and if you're single making under $40,000 a year, your tax rate on that transaction is 0. So 0% of 671 is $0. $0 is what you would owe on taxes for this long-term capital gains. That is the beauty of holding a cryptocurrency asset longer than the year. Now this brings us to our second point, which is capital losses. Now again, there's two types. You have short-term capital losses and long-term capital losses. Now the interesting thing about your losses are that you can go ahead and use those to offset some of the tax liability that you have. So let's look at an example. Let's say that you bought 1,000 Polygon Matic tokens in May 17, 2021 at $2.45 each. And then you went ahead and you panic sold, and you sold all 1,000 of them at 69 cents in July of 2021. So if we go and we look at the numbers here, you bought 1,000 Matic at $2.45 for a total cost of $2,450. You went ahead and you sold that 1,000 Matic at 69 cents for a total of $690. You had an original buy of $2,450 minus your sell, netting you a $1,760 loss. Now that is considered a capital loss, an investment that lost you money. Cool thing is you can actually go ahead and take these losses and use them to offset prior profits. So if we look at the $680 that we would have made in profits from our Dogecoin transaction and subtract our Polygon Matic losses, now we have a net loss of $1,080. Not only that, but you can actually take these losses and carry them forward. So each year you can have up to $3,000 in net losses, and anything over that you can just carry forward into future years. Now that brings us to the third thing we need to understand, which is accurate reporting to the IRS. Now the IRS requires accurate reporting on all the different transactions that you have, because that's what they use to validate that you are paying the correct amount in taxes. Because we certainly don't want to be audited. One, it's a pain in the neck process that can take a ton of time and money that you probably don't have. And then two, there's some pretty large penalties if you go ahead and get caught underreporting what your crypto taxes are, up to the point of even having some of your assets seized. So fair to say, we don't want to be audited. We want to have as accurate reporting as possible. Now, for every single cryptocurrency transaction, the IRS is going to want to know what the property is, so what the coin was, when you bought it, when you sold it, and what were the proceeds? Did you make money or lose money? Now, with most forms of investing, this really isn't that complicated because you don't have tons of different transactions. Now, with cryptocurrency, it's much more complicated because it isn't just simply you buying and selling crypto. Maybe it's you earning interest by staking your crypto, or maybe you earning interest by lending your crypto, or maybe you've earned airdrop tokens from a protocol. And all those different events generate tons and tons of transactions. For my taxes this year, I had nearly 1,000 transactions that I had to go through and say when I bought it, when I sold it, what the profit or loss was, what was the property I purchased. And it was a massive pain in the neck that took me honestly, it took me 5 hours on a Sunday to get through all that stuff. Now that we have those three things clearly understood, let's talk about how Koinly could go ahead and make this process just super fast and easy and accurate for you in filing your taxes. So Koinly was founded in 2018. They've processed over 11,000 tax reports for their users and have managed and tracked about $250 million as of recording of this video. As I mentioned earlier, they have the ability to go ahead and connect to over 300 different cryptocurrency wallets, exchanges, cold storages. They're also rated 4.6 out of 5 stars on Trustpilot, with many of the user reviews highlighting just how good their customer service and support is. Because guess what? Cryptocurrency taxes get confusing, and sometimes you need to lean on someone to help you out. So what I personally love about Koinly is just how easy it aggregates all of your cryptocurrency information into one place. Not only that, but can also auto-generate your 8949 tax form, as well as all supporting documentation to make sure the IRS has what they need to accurately file your taxes. And if that weren't enough, Koinly also goes ahead and they work with some of your typical tax service providers like TurboTax. So if you're looking for a trustworthy tool to go ahead and manage your crypto tax liability, I really can't recommend anything better than Koinly. My only regret is that I wish I had known about it prior to filing my taxes and spending that 5 hours on a Sunday pulling my hair out and wondering why I thought it was a good idea to buy every crypto listed on Coinbase. Now, if you want to give Koinly a try for yourself, I do have a link to it in the description. It's free to go ahead and set up an account. Koinly has gone ahead and given us a 5% discount to the community if you want to go ahead and look at one of their premium plans that goes ahead and generates some of those required tax forms. So with all that said, let's recap. So the most important things that you need to know is 1, how to go ahead and calculate your capital gains taxes. 2, how to offset some of those capital gains with your capital losses. And then 3, how to ensure that you have accurate reports and data to file to the IRS to make sure you're not audited, you're not underpaying what you owe in taxes, but you're also certainly not overpaying. And then Koinly as a potential tool that you could use to really simplify that whole process and save you a bunch of time and money and heartache. So if this video was helpful, if you wouldn't mind considering hitting that like button for me, consider subscribing to the channel if you want to stay in the loop on anything else we post out. And of course, if you have any questions, comments, concerns, just hit me up in the comment section down below and I'll respond to every last one of those. My name is Ryan, No Autopilot YouTube channel. Thank you so much for watching and we'll see you in the next video. Peace.